Hey guys, John Wooten here at the Stock Market Series podcast, and oh man, I am just ridiculously excited. Today has been probably one of the craziest Fridays since last Friday. Got some students today that dropped 480%. Made about at least they made like $4,000, which at least that guy did. So I don't know, just some really crazy things are happening today. A lot of money was made today, 5, 6, 7. I mean, it's been a really crazy day. So I am really excited to talk to you guys today about what actually enables all this profit, what enables all this growth, and what enables all this success. It all comes down to this one simple concept of following patterns, and that's exactly what we're going to talk about today. So the big question is this: how do investors like us, who don't have a PhD in finance or millions to start investing, how do we grow our bank accounts to build real savings and retirements, and yet still have the time to do what we really love? That is the question, and this podcast will give you the answer. Awesome. Okay, I hope you guys are excited, because I am just, so insane. The really big trade this morning was this stock that was up about 10% pre-market, and it was kind of flying under the radar. But then, it came up, in the first 20 minutes of trading, and it had this really nice VWAP breakthrough, and that was the entry point. And after the VWAP breakthrough, it actually turned in to an upward wedge, which is oh my gosh, it was beautiful, it was amazing. And after that, it just skyrocketed right to previous resistance levels. And that's sort of our first thing I want to talk about today is looking at where a stock has historically had support levels, or has historically had resistance levels, where a year ago, 2 years ago, 3 years ago, the stock was unable to break through that price level, or it bounced off that price level really well. Because those price levels, they last for years. I mean, they last. Literally, I've seen ones that have been made in the 1990s, which is 20, 30 years ago, and those price levels still stand as really strong psychological points where people see that and they say, oh my gosh, you better buy or resell it, at that point or near that point, because it probably won't break through that point. Maybe if it breaks through that point, we should all buy because it's going crazy high. And so that was sort of the first thing today. The exit point on that trade was based off historical resistances. The exit point was based off of where the stock, has historically had a difficult time breaking through. And that's exactly where the stock peaked. And similarly, the entry was based off of what? It was based on patterns. It was based on VWAP breakthrough. It was based on an ABC. It was sort of an ABCD, but mostly it was a wedge setup. Wedges are freaking insane. The risk reward ratios on them are berserk, and all you have to do is just take the trades, and the money's right there. It's just insanely cool. But what I really want to focus on, because you guys know the 90 new trades, which is super cool. And that was, it was pretty freaking nice. What I want to talk about is today, I was working on, getting a fulfillment center or partner or someone, to distribute 9 to noon, so that, I'm not shipping all the copies of the book, out of my dorm, because I love it, but shipping 2,000 copies, a month out of my dorm, it's kind of, it's a lot of work. You got to drag it there from the post office, and then stack it all up and put labels on everything and package everything. And, it's a lot of work. And, the key, right, is to take things that make you money and figure out if you can have somebody else do it for a value that's less than or equal to the value of your time. And so for me, I don't make money when people buy my book. I give it away for free. And so, it just makes so much sense to get some sort of outside, company to, take care of the fulfillment, because A, they're going to be better at it, more efficient than I'm going to be lugging stuff around in my backpack all the time. And then B, it's a bajillion times easier because I don't have to do shit. And if you can pay people to free up your time, guys, that is the golden rule of things that you should do. If I want to learn something, I'm not going to go and if I really want to learn it, I'll pay someone who knows what the heck they're talking about and get some of their educational material, because I don't want to go through the hard process of trying to make it up from scratch. It's going and trying to figure out how to bake. I don't know. I don't bake ever. It's just not a good use of my time. But it's kind of fun. What's the last thing I baked? I think the last thing I baked was cookies. If I want to bake some special kind of cranberry cookie, I could start from scratch, or I could go to the store and buy a pre-made mix and then add to it, or I could go online and buy or honestly, you don't buy a recipe, but get a recipe and then follow that instead of just having to guess and think, I don't know, man, sugar, flour, eggs, is that what I need? Might be what I need. I don't know. Why don't we try it for the next 2 months until we make good cookies? Like, that's a waste of time. Like, people out there have A, already done it for you and made a pre-made, setup, pre-made whatever, or B, they have the education to let you how to do it so you can get there light years faster. So anyway, I was getting so I've been like contacting like 20, 30 fulfillment centers. They call them 3PLs, whatever. And I'm trying to figure out which one's, the best deal, and it's going to be probably the best fit for, me. Most people sell like a bunch of stuff online. Right now, like all the stuff I sell online, most of it's like drop shipped from China. So like the only thing I'm like actually sourcing inventory for and holding right now are some of the Ethernet cables from the Ethernet cable company, and then the book. And so like all I want is fulfillment for the book, and it's only like one item. So it's like a super tiny item. You ship it with media mail. I mean, it's a very like specific thing to ship, because most of these fulfillment centers, a good chunk of them, are used to like really, really big products. So trying to find the right fit so that we can have, low cost, so that I don't have to like raise the price of the free book or anything, so that I can get it to you guys losing the least money possible. I mean, right now it's looking like it's going to cost me like $11 or $12 to ship to actually like fulfill the book. So that's why I've got stuff like the audiobook Think We're Rich course and the How to Influence and Influence People course, because if I didn't have that, I would be like burning money, and so it's not a good thing to do. But at the same time, I know that like that book will help literally so many people, and so I want to get it into the hands of as many people as possible, and that's why I give it away for free, just like cover shipping, and it's not even like all of shipping. So I'm on the phone with this one guy. Guys, here's the little secret. Like, if you ever want to get more clients, like, if I submit a form on your website with my phone number, or if I call you, answer the phone or pick up the phone and call me immediately, because, like, today, like, I've been trying to give people thousands and thousands of dollars in monthly recurring revenue, and, like, they won't even freaking answer the phone. So this one guy finally answers the phone. He calls me, and he's like, hey, what are you doing? And I talked to his, I guess the person that is under him before, and we set up, like, some basic foundations for what it is that I do, like, with my book and stuff. And then she's like, okay, cool, talk to this guy. And I'm like, okay, cool, I'll talk to that guy. I need to go to class, so call me in an hour. And so he calls me an hour after physics class, and he's like, oh, are you busy or something? I'm like, I don't know, man, just trading stocks, going to college, but nothing about it. And, oh my God, helicopter, guys. I want a helicopter so bad. Like, literally, they're the coolest things on the planet. Oh my gosh, can you hear that? That's what a helicopter sounds like. Those are goals right there, guys. I've seen 3 helicopters today, and it just makes me want them like 3 times more. They're like literally so cool. But anyway, so I'm on the phone with this guy, and I tell him that, and he's like, oh, no way, that's sick, I love stocks. And I'm like, holy crap, you love stocks? What? No way. And I'm like, what do you do? And he's like told me about how over the past 6 months he's been getting into options trading, and he's doing like about 2-month swing trades with options, which is really like dope. And I'm like, dude, that's so cool. No way. You've got to hear about this pattern setup that one of my students applied today that made him a ton of bank, 480%. And so he's like, okay. And so I'm like, okay, you're at a computer? He's like, yeah, I'm at a computer. I'm like, okay, what broker do you use? He's like, I use TD. I'm like, okay, cool. Pull up Thinkorswim real quick. And he's like, I don't have Thinkorswim on my work computer. And I'm like, okay, you know what? Not a big deal. Go to Google and look up Shopify stock and go to Yahoo Finance. So he goes to Yahoo Finance, he goes to Shopify stock, and I'm like, okay, cool, dude, just pull up the 1-minute candle chart. And he's like, okay, I got the 1-minute candle chart. And then I'm like, okay, add the VWAP. And I show him how to add the VWAP. You just push like plus indicators and you type in VWAP, you add VWAP. And I'm like, okay, cool. So check this out. And so here's where you guys want to listen, because like the VWAP has made me so much money, and it's just like insanely simple to use. It's crazy. So, okay, so he pulls it up, and I'm like, okay. So you see in the morning at 9:30 when the market opened, and it went down a whole bunch, and it went on Yahoo Finance. It only shows the central VWAP. With Thinkorswim, you can see the VWAP, and you can also see the VWAP bands, which are like one band away from the VWAP. I think it's like one deviation. I write about it in the book. It's been a while, but basically like you have one band in the middle, one band below, and one band on the top. And those top and bottom bands are very, 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 very strong support resistance levels. especially the bottom. Because when you're going up and you're making new highs, like you can keep going up for a long time after you hit the top Bollinger Band or the top VWAP band or the Bollinger Band, because the momentum will continue to carry it up. But when you hit the bottom VWAP band or when you hit the bottom Bollinger Band, that's usually a bounce point, especially if it's going to be a green day in the market, which it was today. And Shopify is a bigger stock, so the market actually does affect Shopify since it's, a much bigger company. But I'm going to tell you why I'm trading this bigger company in just a minute, because it's absolutely freaking insane. And it's only on Friday. It's like, I'm calling it like Shopify Profits Friday, or like a big stock, because it's not just Shopify. I'm doing this with Tesla, doing this with Amazon, doing this with Google. But it's interesting because like you don't have to put up thousands of dollars to buy the stock. And anyway, so here's the deal, right? Shopify, and I was talking about you guys this morning, like these are companies that don't move very much. Shopify only moved 2% today at its peak. You guys moved like 4% today at its peak. Yet what you can do with these is very, very powerful, because these larger stocks have extraordinarily strong technical setups. And the patterns, usually with a 9 to noon stock, like sometimes the patterns get messed up. They can be fake breakouts, stuff like that. When you have a bigger stock on a daily 1 minute chart, like these stocks do not screw you over. The setups, they just freaking work consistently over and over and over again. And so because of that, like all of the technical setups that we talk about in part 2 and 9 to noon, like they're very, 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 like they work all the time. And so like if you're starting out and you want to practice, like practicing on bigger stocks, like it's going to make you a very small amount of money if you don't leverage it, like how I'm going to tell you in just a minute. And if you just buy straight stock, percent or two a day, which is still really, 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 really good. But it's not going to make you like as much money as a 9 to noon stock. It just won't happen. But it's a really, really great way to practice technical analysis in a low risk environment, because these larger stocks, they follow technical patterns a whole lot better than it's very, very, very consistent. And so if you really want to start like trading technical setups, but you don't want to risk a lot, like trade stuff like you guys, Shopify, Tesla, on like daily 1 minute charts. And these stocks, like they're not going to make you a lot of money. I'm not telling you this because it'll make you a lot of money. I'm telling you this because it will significantly strengthen your technical analysis skills by looking at intraday setups and getting in and out within a half hour or so. Usually 9 to noon trades are much shorter than these bigger stocks, because these bigger stocks move slower. And obviously, like the stock, like you can trade any stock you want. I've found those three to be really, 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 really good. You guys has been a really nice one. I found those three to be really solid, just from experience over the past probably 8 months of like kind of messing around with this principle that I'm sharing with you right now. And so obviously, like if the market changes, just like find stocks that sort of have like good setups intraday, but aren't particularly volatile. So these are going to be sort of like these bigger companies. You guys is like this massive oil thing or natural gas. And so these are bigger companies, but they have solid historic trends of movements. And so for these, like they over and over and over again have really good intraday setups. So just, see if they work for you, and also, keep your eye out for other stocks that are sort of like that. Not a priority. Like for me, like this isn't a priority, but I think it's a great way to learn if you're starting out. Unless you do what I'm about to tell you, which is absolutely bonkers and totally insane. So here's the deal, okay? So I'm like, okay, cool. So you see the VWAP, and he didn't see VWAP bands, which is okay. I'm like, okay, so you see like when it went down a shitload, and when it went down a bunch, it went down to the VWAP bands, and that was really the buy point. And what you do is so it's a Friday, okay? Today's Friday, and the weekly options for Shopify, for any stock, but in this example, Shopify, just any stock though, they'll expire on Friday, right? So the weekly options on Shopify expire today. And because they expire today, they have very, 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 very low value, especially if they're out of the money. If if the strike price for a call is above the current price, then it has no inherent value. The only value you're purchasing is time value. And the time value is very low because it's only got like 8 hours left for the option. And so because of that, these options that are usually like $20 for Shopify, which is $800, $480 stock today. I mean, it depends obviously when you're watching it. Like they're like $20 calls usually, or $40 calls, which means that for one contract you have to pay upwards of $4,000. You can get that same kind of contract for literally 68 cents today was the call it. I think it was $472.50 was the first entry point breakout that we bought this morning for calls. For $68, you can control 100 shares of the company. And so Buddy and I, we got in, I think it was about a $800,000 position. I think it was 700, he said, because it was a 480% ROI, but it was 2 trades, so I'm going to get to that in a sec. And so what you do is you buy the call that expires on the same day at the end of the day. Now, please understand, this is risky as hell, and you want to get good at technical analysis before you do this, because if you don't, you can lose your shirt. If you risk, for him, like $800 is a pretty reasonable percentage of his portfolio, right? And so, it makes sense for him. It's like, yeah, it's not, going to kill him. It's a pretty solid diversified position. And so, and it does, it's just any kind of portfolio size you're talking about here. Add a 0 to it, make it $8,000. Add 2 zeros to it, make it $80,000. It just depends on how big your portfolio is. This student, he's like in his, he's actually still a teenager, which is pretty dope. And so anyway, oh gosh. Okay. So the price goes down a whole lot at the beginning of the day, and then it bounces, and it goes up and up and up. And I'm like, okay, you see when the price crosses that red line, the VWAP? And he's like, yeah. And I'm like, okay, that's when you buy call options about $2 above that are out of the money and have no inherent value. And they're super cheap. So you buy the call options, and then it breaks through the VWAP, and it goes to the top of the VWAP bands, and it keeps pushing and pushing and pushing and pushing. And all of a sudden, those options that were, those ones, the first ones were $2. Those options that are $2 turn into $5, and that's your first double. That's you double your money in like half. I think it was like 12 minutes, to be honest. And it's insane, and it moves so quickly because the price is at, for example, 470, and you buy the 472.50 calls, which are worthless inherently, and then the price goes to I think it went to about 476. I think it was 476. And then now all of a sudden they're worth not 5 times more, 250% more. And then you sell that like it's hotcakes because it's at the top of the not top of the Bollinger, it's at the top of the VWAP band. So when the stock is at the top of the VWAP bands, that's when you know you're approaching a peak. And so you sell that and you take your insane amount of profits. And here's the cool part, okay? Because a VWAP crossover, a VWAP breakthrough works on the upside and it works on the downside, especially in the 9 to noon time frame. And so that trade was at like 9:45 when I was trading that other stock that was up 70% today. And then like my buddy's like, holy crap, dude, that's a lot of money. And what happens is after he you sell the contract, because it hit the top of the VWAP band, so then it went down a whole bunch. Not a whole bunch, but it went down, $2, $3, went down to like 385. And that's when you can recognize that the price is tapering off. And it's also very, very high. It's much higher above the VWAP than it should be. Now, what's interesting is this is where experience comes in. This is also where risk comes in. The first thing you can do is you can buy puts and you can short the stock when it crosses below, when it goes down and it crosses VWAP and it's going down, which it did do. That's the first thing you can do, and that will make you about double your money. The second thing you can, at least on this trade, right? The second thing you can do is you can look at the historic performance of the stock. Now, look, it depends obviously on when you're watching this or listening or whatever. But like for every single week for the past 4 months, on Fridays, Shopify has just like badunked. It's gone straight down afternoon, and it's gone up a whole bunch in the morning, and then you make a whole bunch on the call options in the morning, and then after that it just goes down a boatload. It goes down and down and down and down and down. It's crazy, and it's only like 1 or 2%, but when you're leveraging it with options, which I'm about to kind of show you in a sec, you can kind of see you're literally looking at multiples of 400, 500, 600, 800% in the span of like 40 minutes, which is insane. And so what happens is it tapered off, and that's, Jake's really good. He's been following my stuff, reading my book, listening to my seminars for a while now, and he knows his shit. So he bought puts. It was at the stock was at like what? I think it was 480, 475. Bought puts at 470 to 472.50. And the VWAP at the time was at 474, about 473.50. So the stock is like way above the VWAP. And then he buys these way out of the money puts for 68 cents, which is like insane. Because it's like risky shit because, you're risking but at the same time, it's way above the VWAP. And so obviously if you get in later, he could have probably bought those same puts for about $2 if he waited until the stock went down to the VWAP. But like I said, he's more experienced. He's been trading for a while and been with me for a while, and so he's really good. So he was smart and he did the right thing, which was to get in early, have some balls. He grew a pair and he went in, and then the stock started going down, and then started to crash towards the VWAP. And here's the critical pattern. Not only has this stock gone down like every single Friday for 4 months or whatever, but like if it crosses down below VWAP, it's gonna shit. It's gonna go down to the bottom. It's gonna go to the bottom of the VWAP bands, just like when it goes up, it goes to the top of the VWAP bands. And so, or the Bollinger Bands, depends on the stock, depends on how tight it is. Like if the Bollinger Bands are really tight, it might only go that high, just if they're lower than the VWAP bands. It's kind of a little bit of an intricacy. It comes with experience, and that's why you want to have Bollinger Bands and VWAP bands. But for Shopify, it was just the VWAP bands. The Bollinger Bands were super, super wide. Didn't matter at all. And so it goes down and down and down and down. It hits the VWAP, and this is when you would kind of get in if you're a little more conservative, with a stop loss of, about a quarter up. This is an entry point at 473, 4703, and so, or 473, my bad, they're not $4,000, it's $400. And so you buy contracts at like $68 a pop, or $100 a pop, or $200 a pop, and then you would probably set a stop if the price hit 474-ish, which would probably take off about a third of the contract value. You'd have about a 33% loss on that downside risk. And so that's when you get in if you're a little more conservative. By that point, he was already in, and then it crashes below the VWAP, just like it does every single time. And it goes straight to the bottom of the VWAP bands. It goes to like $700 and, I think it was $56, maybe it was $768, something like that. And basically, he turns it in, from a 80-cent entry into 80 cents per contract, out of the money contract into like $7. He exited, I think it was like $540 he exited, and I think he added it like $180 because, like I said, if you're getting in on a riskier entry like he did, like getting in early, sometimes what you can do, which is smart, is you can get in like a half of a position size so you're not risking too much, and then you can add to it, and that's exactly what he did. Very smart, very good technique, good strategy there, and it just freaking works really well, and it blew it out of the park. Total gain today for him was, what most people make in about a month, which is it's pretty dope. It's really, really, really impressive, and man, he's been crushing it lately, and I'm very, very proud. So it's really great to kind of see like students like use this and be like, holy crap, man, like this works for other people. So it's just been like really cool. So yeah, hopefully you guys, he was the trader we interviewed, I think it was like a couple episodes ago. That was the same guy. So yeah, now you know. Options are pretty crazy. Once you get really good at trading stocks, once you know your shit, those things make it super cool to leverage, super easy to leverage. And so same thing, if you're practicing, you get really, really good with, some of those bigger stocks you were talking about earlier. You can do the exact same thing with them. And even though the underlying stock only moves like 3%, 2%, maybe even 1%, you can double, triple, quadruple your money with the options on a Friday. So the key here is that these options expired today. And so because of that, they were very, 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 very low value. And so if you buy out of the money and then all of a sudden it becomes in the money in a very short period of time, that's when you can make a lot of money really quickly. And so that's kind of what I was explaining to my buddy at that fulfillment center today. And then he was like, holy crap, man, I should just quit my job and trade stocks. And I'm like, I know, dude, why aren't you doing that right now? And it's like, holy crap, man. So that's my message. He's been working there for 2 decades though, so I think he really likes it. So hopefully they'll let him like trade 9 to noon while he works. I don't know. He's probably honestly just gonna sneak some stock stuff on his computer, because it takes like, a small amount of effort and focus to like actually make a trade like that. Like 9 to noon trades are obviously more involved, like especially with like pre-market gainers and top gainers, and so you got to be all in on that. But like with these bigger investments where you're just leveraging movements that are very, very easy to predict, like you can make insane gains with very, 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 very minimal time invested, which is like super dope, and it's just really, really cool. So that's my message today. This is a really exciting week, really exciting day. One of my clients today sold NVIDIA, low six-figure gains. I mean, it's just been a phenomenal week. I'm a little bit scared. Like, market's pretty damn hot, and everyone knows the crash is coming because of the inverted yield curve. But dude, like, I mean, that comes, and then what? Then you just buy more puts, you buy more, you short more, and the 9 to noon trading is the exact same, because like it's the same. You're just trading gainers, so you're not holding anything overnight. So it's just phenomenal, and I'm just really, really excited for 2020 now, which is it's just insanely cool. So yeah, thank you guys so much for listening. Really, really appreciate it. Hope you had a ton of value out of today's podcast. Go out there, apply it, absolutely crush it, and I will see you in the next episode. Thanks, guys. Bye. Want more stock market secrets? If so, you'll get your free copy of my best-selling book, 9 to Noon. You get your free copy plus $11,176 of unannounced bonuses it took me years to uncover completely for free at 9tonoonsecrets.com. Inside 9 to Noon, you'll find the top 38 secrets you can use to double your portfolio every 2 years and make upwards of 10% daily.